In this video, I'm going to take a look at candlesticks and not necessarily how to read them, at least not from a basic standpoint, because there's plenty of information about that. The high, the low, the open, the close, the shapes, the shooting stars, the engulfings, the spinning tops, all of that is fine and well, but this video is going to assume that you at least know candlestick shapes, and if not, there's plenty of information out there. You certainly don't need me going on about what each shape is. But when retail traders learn how to trade Forex, especially Forex, but other markets as well, they'll learn something like, if you see this candlestick, you should be a buyer because this is a hammer, and hammers are magical. They show that the trend is reversing, right? We're in a downtrend, and you can see that we tried to break down, but the sellers ran out of exhaustion, or ran out of momentum. They've shown exhaustion. The idea is we go higher. And it's not that that can't work. Of course it can work, and it does work in the right circumstances. The problem is most people simply don't think about it beyond that. When you look at this candlestick, you have to recognize that the idea behind this is that a line chart would look something like that. So everybody in this candlestick is losing money as it rises. So, you learn that type of information, and you have a little bit of success here and there with them, and that's fine. Like I said, there's nothing wrong with trading that candlestick, but you need to always take it in the larger context of things. There's a couple different things that I pay attention to. Number one is the trend. I don't like reversal signals. That being said, this candlestick is a reversal signal, but what if it's a hammer that forms in a pullback of a longer-term uptrend? Well, it has the trend working for it, the longer-term trend working for it. Size. Size really matters. Despite what some will tell you, size really matters. This is especially true with like an engulfing type of candlestick or just a long candlestick. Furthermore, close. And when I say close, I mean like the real body close. The closer we close to the absolute top or bottom, or the longer the wick, the more significant the candlestick is. But above all else, before you even look at a candlestick and think about any of these other things, it's where. Is it at support and resistance? This goes back to that video that I suggested that support and resistance was the absolute building blocks of any type of trade or trading system. Because, let's face it, regardless of what you've been told, regardless of what you think, there is essentially a coin flip type of expectancy in any trade. It can go up, it can go down. Now, you can increase the odds in your favor, the probabilities a bit, and that's by finding all of this. Because as we know, anything can happen during a trade. So I'm going to take a look at a couple of different candlesticks here, and I'm going to kind of show you my thought process. Because part of the problem you have with candlesticks is unless you are talking about an hourly candlestick, it's very possible that somebody giving you analysis on a chart, it might have a different shape to the candlestick. And the reason is not all brokers close their day at the same time. Now, an hourly candlestick, of course, an hour is an hour. But a GMT plus 2 and a GMT base server will have different looking 4-hour charts, as an example, because of when the candles start forming. So that is why I don't get too hung up on the particular shape. But what I'm trying to do is I'm trying to read into what the market's whispering to me. Because sometimes the market will whisper to you, sometimes it'll scream. And you have to come to the acceptance that sometimes the market's telling you there's nothing to do. So I'm starting with this weekly chart of Canadian dollar. And there are some candlesticks that I look at and I think, you know what, this might have been a trade to take. Again, this is a weekly chart. And you can see that clearly we had a pretty significant sell-off. This candlestick right here to me is very interesting. And the reason is it closes at the very bottom of the weekly time frame. So what does that tell you? That tells you that everybody was comfortable going home for the weekend, short this pair, or at least got out of their long positions. A lot of people had to be involved to make that happen. That was the first sign that perhaps we were going to test what should be support based upon the most recent pullback, right? So that in and of itself can give you an idea of where the market's going. So check out this candlestick here. This candlestick looks a little bit like a hammer. And those of you who are bullish of this pair think, okay, well, we're going to be saved. Then the following one looks like a shooting star. So that tells me that the buyers came in, but they failed. The psychology failed. And then eventually we broke down. At this point, you should be able to spot that this candlestick here tried to break above 138 and then closed at the very bottom. That's a very negative look. With that, we started falling again, right? Now, here's the thing. We were in an uptrend to begin with. So I need a little bit more kind of confirmation, if you will, on taking these types of trades. However, when you see a rejection like that, that is truly, more than likely, going to be a sign of something bigger. So that's the only reason why those look interesting to me. So we rally, and notice how price is just kind of grinding away. And it's going higher over the longer term, but there's nothing really overly convincing about this. It's just kind of grinding away. Now, you certainly could have made money, and you can make an argument for, well, we had been in an uptrend, and then we turned around and we had this impulsive candlestick. Well, that impulsive candlestick closed towards the top, so that might have been the first sign that you were going higher, right? And then that trend kind of got you involved. Well, notice you get a shooting star and a shooting star right here at this area that had been important, where we had this initial breakdown here, where it really started to change things. And that is interesting. Think about it this way. They tried to break above 138 2 weeks in a row and failed. Everybody in that area is getting concerned. And then once this candlestick forms, everybody who is long of this pair from here up is now losing money. What do they have to do? They have to sell their position to get out of it. And you can see that was a kickoff of the next impulsive wave lower. This all starts with this big, huge impulsive candlestick, and then this confirmation here. Then you get another opportunity here. So what you should surmise from this is that the trend was changing, it did change, and was confirmed. So you're still going with the trend, despite the fact that we had rallied before then. So let's take a look here. This is where we're at down here, where we reverse. Longer term, and I mean much longer term, from here, we're in an uptrend despite that pullback, right? Sellers came in, and again, what did we see? We saw a little bit of a bounce back, but then we saw a hesitation the next week. Once you take out this impulsive candlestick, that's a sign that we are grinding beyond the sellers and continue to go higher. And that's exactly what happened. Again, you have to think about the psychology. Those sellers, which had been so aggressive, are normally the first ones to get out. Just as this was very aggressive, I should say, this candlestick was very aggressive and then the next week it was very quiet. And once we took that out, we actually formed what is known as a 3-bar reversal. If you want to look at stock candlestick formations, you could think of this kind of like a morning sun, or sometimes they call it an evening star. Excuse me, not a morning sun, an evening star. It's a 3-bar reversal is generally what people call it. And then from there, we just kind of go back and forth. Now, this is where things get really interesting on this chart to me. You can see this gap. This gap is crucial because that means Monday morning we came in. Who knows what happened? But in Asia, everybody started buying dollars and dumping, I would imagine, everything, not just the Canadian dollar. And we did it again the following week. A couple gaps. That's a very bullish sign, right? We kind of pull back a little bit, and you form a hammer here, and a hammer here. But notice, before that, you formed, I wouldn't call them shooting stars. You could call them inverted hammers, I suppose. But notice things started getting noisy. And as a result, the market is asking questions after this big move. And that's what I want you to pay attention to. Look at a line chart. It tells you, if you look at this, you're like, oh, okay. Obviously, long is the way to be if you have to be somewhere. But we're just not going anywhere. And again, this is a weekly chart. So after a couple of very impulsive weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 9.5 weeks or so, 10, we go nowhere. That's a sign that you're running out of momentum. We close below the 138 level, and then finally close below this gap. That's a sign that you're starting to look for selling opportunities, right? Because we are clearly wiping out a lot of impulsive moves to the upside. Here's an even clearer sign. 130. We break down below there. We close at the very bottom of the candlestick. And then we bounce 2 weeks later to form a shooting star, a candlestick that everybody loves. And you can see what's happened. So the point of this is, you want to be very cautious about just taking a random candlestick. You want to take a look and say, has something impulsively changed? Have they confirmed what had been going on? Or is there a little bit of hesitancy? So this is the Euro Turkish Lira. This is about as exotic of a pair as you can get. Well, notice how we had been rising. We had this impulsive candlestick. We had this impulsive candlestick here. We closed at the very bottom. But the next candlestick, which I'm assuming was a Monday because there was a gap, we turn around and wipe that out. So when you turn around and wipe out that type of candlestick, that normally means something. Just as here you can see the resistance. Look how we closed at the top of this candlestick. So this goes back to that support and resistance bit. You can say, okay, fine, there's resistance there. Look how high we close. This is a no-brainer type of trade. That's why a lot of times when people trade breakouts, and this is something that we'll talk about, but when they trade the breakouts or the reversals, they wait for the candlestick close. Because false breakouts happen all the time. You have to be very cautious. But when traders are willing to sit on it all the way up here, then that means something, especially in like the Euro Turkish Lira, because that is a pair that it's thinner, tends to make a lot of noise, and therefore traders really have to have some conviction. This is Kiwi dollar monthly, right? And I'll drill down on this, but you can see as I record this, look what's going on. Shooting star right here at resistance, broke down, but we're still fighting. So here's what you need to pay attention to. That's an area of consolidation. That's all that is right now. And while this shooting star looks very juicy right now, notice how all of the momentum has been to the upside until we got to this point. So we're not quite ready to break down. And for what it's worth, we're when I record this, it's May 22nd. So we've got another week before, this candlestick could be a white one before it's all said and done. But notice here, notice this big impulsive candlestick. Look what that kicked off eventually. Let's go to the weekly. Here's a weekly that closed almost towards the top. That tends to have follow through. And when it doesn't, it means something. And that's something that's worth paying attention to as well. Just as if you get a candlestick that is supposed to be bullish but turns out to be bearish, that's or the market turns out bearish, that's something to pay attention to. Like a failed pattern. Failed patterns are just as valid as patterns that work out. So, for example, take a look at this shooting star, or this shooting star, or this shooting star. That, by those out there on the internet, that would tell you, hey, look, we're slowing down, things are looking pretty crappy, let's short this because we're running out of momentum. Well, look what happened. As soon as you broke above the top of that, that shows impulsivity to the upside, because not only are you continuing the trend to the upside, but you're breaking through all of those sellers there, and now they have to buy to reverse their position. And when I look at this, you can see that there is a reaction later where we bounced from. So when we broke through this shooting star here, it mattered later. You can see. This showed that we were ready to go down, right? This shows that, this candlestick here shows that they tried to rally it and they couldn't, and wow, we should really kind of take off to the downside now. Well, you can see that we broke the top of it and then eventually broke out to the upside. Notice how we had a couple more. So once you start snapping these long wicks in the other direction, that's a sign that things are changing. And I think that's really the point of the video more than anything else that I'd like to impart in you. You want to see long candlesticks justify your trend and your trade. And quite frankly, when you look at this candlestick breaking through there was a failed breakout, or breakdown in this case. I would have fully expected this market to continue going lower, but as soon as that candle gets broken above, and then most certainly when this one and this one does, that tells you something's going on. So you need to go through your charts and you need to understand where things are happening. This is the 70 level. So that, of course, is a large round number. This is a shape that should confirm this massive one, but it does not. So that's a buying opportunity. Another way to look at these candlesticks that have size to them is, when do they occur? So, for example, we had several small ones by a long one. Well, we went right back down to the support level, which is 65. So you would expect some type of support. So small, 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 long. We go down. We also have, in this case, a longer one here after three very small ones. And when I say small, I'm talking about the range of the body. You can see that we closed much higher than we even dreamt of those previous 3 days. And of course it works on the lower time frames, but the lower time frames, I will tell you, are much less reliable. Take a look at this breakout here. This is basically 70-ish, 70 and a half on the 4-hour chart. This was an area where we kept selling off of. Well, look how we closed here on this one. We closed all the way up here with very little give back. Not a huge surprise that we would rally. So I would encourage you to avoid reversal candlesticks just for the sake of taking the reversal candlestick. You need to look at it through the bigger picture. Remember, it's the size of the candlestick, whether it's with the trend or not, and whether or not it shows any type of impulsivity. You kind of take those things together and then you start to really read candlesticks, what's going on. It's very lazy to come in and say, well, this shape do this shape do that. Just a simple common sense question is, do you think that traders that are running $50 million for a fund are selling just because a shooting star appeared or a hammer appeared, so therefore they are buying? They run through fundamental analysis, and basically risk appetite all comes down to psychology. And when you have a situation like this where you start selling off rapidly, obviously something negative happened. You want to be with the psychology of the market. Again, these long candlesticks that confirm something that already happened are by far one of your best shots. Trying to go against the herd very rarely works. So take a look at these candlesticks. Look at the size. Look at where they're at. Are they with the trend or are they not? Are they a broken candlestick? Has a big candlestick like this been completely wiped out? That shows a lot of bullish pressure. But as soon as you break through that, everybody's in trouble and they start bailing. So keep all of that in mind. Don't worry so much about the shape. Kind of read what the market's trying to whisper to you.